because it follows a lot of the same basic paradigms of classic story stocks. You have a very interesting story with a good management team and a recent IPO, so there's not a lot of shares outstanding, and you see a very quick ramp in the stock price, but eventually other market dynamics take over and it does fall back to earth. This feels a lot like the examples you outlined.
So why isn't it like an Amazon or a Netflix, which have continued higher, of course?
It could very well, but let's not forget Amazon, which is a great example, certainly had its fair share of tough times during the bursting of the dot-com bubble, and it stood the test of time. This could be one of those cases. The other examples weren't, but we just don't know yet. In the interim, you're paying a very heavy-duty multiple on revenues just to find out if that's the case.
Nick, I guess I'd argue the key difference between the two is whether they sustain very impressive top-line growth. The earnings don't necessarily have to fall through immediately, but earnings growth has to quickly follow behind the hope. So Beyond Meat could deliver that.
Yeah, no, you raised the right point. I mean, for now, we're still in venture capital kind of valuation land. So you got an $8 billion market cap. You want to pay 10 times revenues. So you got to have Beyond Meat hit $800 million in revenues, which seems possible, even though it's only got $40 million today. We'll see if they can be profitable, but that doesn't seem to be exactly the most important issue for investors right now, either on the venture side or the public market side. You're right, it really is that revenue growth. The earnings, maybe yes, maybe no.
I wonder, Nick, how much of it is the fact that Beyond Meat is still a pretty young company, still very much coming into its own, whereas on the flip side, you could have said before the IPO that maybe Uber would also be a cult stock, yet that has not performed so well.
Yeah, it's a great point. These smaller tech IPOs are definitely doing better. Zoom's another good example, obviously. And, here's a case study in why going public earlier is actually good. The company today, Beyond Meat, said going public has actually enhanced their profile with potential customers, and it really did give their confidence in future revenue growth a big bounce. It went public earlier, and it's getting that bounce. Companies that wait to go public don't seem to be getting that same bounce.
Bob,